In this video from the series The Blocks in Blockchain, we take a closer look at blockchain limitations. This is part 7, Accounting and Reconciliation. However, maybe the better questions to ask are, what are the problems the blockchains are solving, and what are the problems the blockchains are not solving? Blockchains solve for the transfer of unique copies of digital assets or data in a network, where everyone in the network can share the same records consistently without the need for a central intermediary. Participants will share and receive updates to their records in the network. The updates to the shared data are known as state changes. Everyone can reach consistency across the network as the state changes are organized and ordered. This can be achieved by a competition such as the mining in Bitcoin, or consensus via voting to validate all the entries in the ledger. This allows the network to create an encryption-signed and validated hash-linked immutable record. Blockchains also solve for confidentiality. Well, somewhat. Some may just be masking the users. Some solutions are only pseudo-anonymous, like Bitcoin, where once somebody knows your public key, they can tell everybody else who you are. Some solutions use techniques such as zero-knowledge proofs to hide identity and secure the network. However, these techniques do take a long time to calculate. So, in summary, blockchains solve for distributing consistent, unique digital asset state changes across a network, confidentially in certain cases. But aren't they ledgers too? Well, let's see. So that's the first question. But what about the second one? What do blockchains not solve for? In these series of videos, we'll look at memory scalability, capacity and latency, and computational scalability. We'll then take a look at decentralization and legal and regulatory requirements. The next videos will then cover loans and financing, as well as future data transactions. We'll then take a look at T+0 or same-day settlements, and then finally accounting and reconciliation. Now, I know what you're thinking. This is a lot. Stick with it, however. All these areas are important, and all the current publicized distributed ledger technology solutions are struggling or failing with these capabilities. To make these easier to digest, we've created one video per topic. By understanding all these topics, it will save you time and money by not pursuing inadequate solutions. So let's look at the topic for this video, which blockchains do not solve for. Carrying on with further analysis, we'll show that the current blockchain designs do not solve for accounting and reconciliation. So, when Alice pays Bob or transfers any asset, you cannot just record debit Alice and credit Bob. For Alice and Bob, this is single entry accounting, not double entry accounting. Looking at Alice's financial reporting, there's the transaction ledger, against which offsetting debits and credits are booked against 3 types of accounts. The balance sheet has asset accounts, liability accounts, and equity accounts. If Alice's transfer to Bob was a loan, there would be offsetting entries against two asset accounts, cash and loan receivable. If Alice's transfer to Bob was paying off a loan from Bob, there would be offsetting entries against one asset account and one liability account, cash and loan payable. And remember, without payables and receivables of financing, blockchains cannot record future dated payments or accrued interest. And lastly, if Alice's transfer to Bob was a payment for services provided, there would be offsetting entries against one asset account and one equity account within the income statement, cash and service expense. But the key point of double entry accounting is that the offsetting entries allow the trial balances to be confirmed and the account balances to be monitored and verified. And the transactions in the ledger can easily be reconciled one-to-one with the records of wherever the assets are held. So we've seen Alice's accounting, but Alice's money would be held at a bank. Let's look at their accounting. For client transactions, the bank will post offsetting entries against the client accounts and its ledger, which can then be reconciled with the trial balance and monitored balances together. The financial reporting for the bank's income statement and balance sheet will be handled separately and later. The payments between banks will be cleared and reflected on the bank's clearinghouse statement, and those will be reconciled to the clearinghouse ledger. Again, the financial reporting for the clearinghouse will be handled later and separately. The bank will also reconcile its clearinghouse statement to its own ledger to ensure the transactions and balances at the clearinghouse are accurate. But the point of all this is to show that without double entry accounting, the ledgers and financial reporting cannot be processed accurately and reconciled. And the blockchain ledgers only record single entry balance changes with the transactions implied. For instance, Alice has $10, Bob now has $6. Alice is left with $4. These records make reconciliation untenable, and here's why. Well, with its single entry balance changes, the only way to reconcile to a blockchain ledger is to take a copy of the entire blockchain ledger and run the entire ledger through an interpretation algorithm for each party on the ledger. And then each party will reconcile to their own unique output from this report. But all the unique outputs will need to be reconciled independently back to the entire blockchain ledger. There are two problems with this. It's complex, prone to error, and takes time, and the audit standards will require keeping copies of all the materials for each reconciliation, which is untenable. You would have to keep a copy of the entire ledger for every day you reconcile to it. So current blockchain designs do not solve for accounting and reconciliation. So if you're interested in a viable DLT solution or want to contact us, go to l4score.com. We're also available for advisory or due diligence consulting for DLT for the financial services and other industries. Thank you.